What is going on, everybody? It's your boy Stas here. Welcome back to another video, and happy Easter, by the way. Cheers. I appreciate you all for taking time out of your day today to watch this video, and I promise I'll make it a quick one. We have to break down the charts on Sofi heading into this brand new week. We're going to go over my thoughts, what I'm looking to do, as overall we're getting closer and closer to earnings, which aren't this week, but next week. So guys, get ready, hit the like button, do not forget to subscribe, follow along for more content, and join the free email stock newsletter where I send out my top stocks for free weekly. That is linked down below. Make sure you guys get in there. And with that being said, cheers again, take a sip of your coffee, let's dive into it. So Sofi, oh man, it's been quite the ride as the entire stock market's been crazy. We all know that, right? We're not going to get too deep into that in this video, but Sofi has been all over, and we had a pretty good day on Thursday. Let's start there. The day on Thursday, which Friday we had the market closed. It was Good Friday. Markets were closed, but on Thursday, Sofi went up 3%. We actually broke out into close, and we continued climbing after the bell. Very good sign overall there for the bulls, guys, considering in the first half of the day, Sofi was trading in the low tens, well, mid tens, shall I say. And then all of a sudden, boom, we started breaking out to wrap up the day in the second half of the day heading into power hour. And like I said, we popped over $11 in the aftermarket. We kept on pushing, guys. So we closed at 10.98, up 3%, 32 cents in the green, and we got to $11.06 after the bell, another 0.75% of a move. Not too bad, man. Not too bad if you ask me. And on this 5-day, 5-minute, we're not breaking out fully by any means, right? But we are seeing a golden cross. We actually took out the highs from Wednesday, right? We did that on Thursday. And now it kind of looks like we're breaking the highs from Tuesday with the aftermarket push on Thursday. If I draw these lines out, you can see. And again, we're not fully breaking out, but we're noticing some initial signs. Let's just put it like that. We can see here again, we took out the highs from Wednesday. We're now starting to push through the highs from Tuesday, excuse me. We hit about 11:03, whatever. We're starting to get out of there, and now we're actually gunning for the highs from Monday, or at least that's what I'm going to be watching for this upcoming week. Will momentum hold above $11 and start to build above $11 back to the mid 11s? That would be ideal for the bulls heading into earnings, which again are not this week, not this Tuesday, but the Tuesday after that. The 29th of April is when we're getting Sofi's earnings. So we actually closed the week off strong, and now I'm looking to see, again, if we respect $11 and start pushing to the mid 11s in this gap right here. You guys can see it. You can see we kind of traded here in the mid low 11s. We traded here, I believe, on last Monday in the pre-market, but that didn't hold too long, right? We opened up and then we tanked Monday morning all the way down to about 10.50. So interesting times. Let's just say that. Interesting times. Last week, although we didn't break out, we did hold the mid-10s all week, and then we started popping to end off the week, which I'm happy about that. But again, I want to see if this momentum continues to the 11s, 11 plus, 11.50, 11.50 plus, and we'll see where it goes from there. And on this 1 hour time frame, you guys are noticing kind of a sideways inverse head and shoulders. Do you guys see it right here? We have the left shoulder, the head. We have the right shoulder right here, kind of in the making. You see that? And then we have, if I zoom in a bit here, we do have higher lows being made over the last couple of weeks. Nothing crazy, but we do have these higher lows being made. and arguably an ascending triangle. Do you guys see that ascending triangle? Higher lows into this 1120 resistance, which if we start breaking out of this triangle, right, we start pushing out of, let's say, the mid 11s. Not only is this triangle playing out, but then the inverse head and shoulders would be playing out. And if this thing breaks out of the mid 11s, guys, we could really be taking off from that point, maybe back to 1250. 1250 was the high. It looks like here from early April. Yeah, early April on SoFi, that could be where we go, followed by, let's say, 1390, $14, which you all remember. That's where we were to wrap up March, about a month ago at this point. And you all know I've been selling covered calls on SoFi, or at least I did, about a month ago when we saw that rally to 1390. I'm not sure if you guys remember that, but I sold the $15 calls that expired a couple days ago. So that trade worked out beautifully. We sold the calls on this rally when the premiums were spiking up. And at that time, I didn't see a breakout fully coming. So I sold the calls. Boom. We didn't get a breakout. That trade worked out beautifully. And now we're starting to spike up again. I'm not in calls, or I didn't sell calls this go around. I didn't roll those over because we have earnings. And if earnings cause the stock to pop, I don't want to be in covered calls because then I'm at risk of losing some of my shares. That's the risk with selling covered calls. Let's say, for example, I sold the $12 covered calls that expire, let's say, in 2 weeks from now or something. And let's say earnings come out and the stock pops to $15, hypothetically. We don't know what's going to happen. Not trading advice, but let's say the stock ran to $15. I would have to get rid of my shares, or at least the shares I sold covered calls on. I would have to get rid of them at $12. If I sold that $12 strike before earnings, and then earnings caused the stock to go to 15, boom, I would miss out on that $3 gain from 12 to 15 because I'm obligated to get rid of my shares at $12, right? That's the risk with covered calls, is you miss out on the upside above the strike price. You know what I mean? But if you do it right, you're not going to lose money. Your upside is just capped. You know what I mean? So if you're in at like $8 a share, if that's your average cost, you make $4 a share on the shares you sold covered calls on because you have to sell at $12. That's the strike. You sell at $12, so you make $4 a share instead of $7 a share if you didn't have covered calls, and you could hold the stock to 15. Boom. That's the risk. The main risk is you miss out on the upside, but as long as you're selling covered calls, as long as your strike price is above your average cost, you're not going to lose money, right? Your upside, sure, could be capped if the stock explodes while you're in covered calls, but as long as you sell the calls at a strike price above your average cost, you're going to be fine. You're going to be fine. And I always make that a mission, or not my mission, but I always make that priority when I'm selling calls only above my average cost, the strike price, only above my average cost. And when I would screw up, years ago, I would buy crappy stocks just to sell covered calls on them. And then all of a sudden the stocks go down a bunch. And then I'm selling covered calls lower than my strike price. You know what I mean? Because I'm down on the position. That is not where you want to be. Do not buy a stock just because there's high premiums, just because you want to sell covered calls on that company, on that stock. Because if you don't believe in the stock and then it goes down, right? You're red on your position and you're only in it to sell covered calls. Now you have to sell covered calls under your strike price. Then you get filled, or you get your shares called. Boom. Now you have to sell for a loss. You don't want to be in that position. So overall, that is it for SoFi. Pretty much it for the video here. I'm eyeing up the stock heavily this upcoming week. I already own it. Obviously, I'm in it at a cheaper price than where we are now. I was buying it at $5, $6, $7, a little bit at $9 recently. And I'm in at a good price, but I'm still not going to be selling covered calls because we don't know what's going to happen after these earnings. The stock could go ballistic for all we know, and I don't want to cap my upside. But overall, man, keep your eyes on it. This week's going to be interesting. We have an inverse head and shoulders, clear as day on SoFi here, plus an ascending triangle, which if that, plays out, we could be going $11.50 plus, $12 plus, no problem. So let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe, guys. Follow along for more content. I appreciate you all as always. And join the free email stock newsletter. I send out my top stocks every single week right to your email. Put your first name and your email address using that link down below. And with that being said, cheers. I'll catch you all in the next video.